All right, everybody. Today is Monday, February 24th, the day after options expiration Friday. And looks like Max Payne continued a little bit today. It was an up and down day in the market. So market started off up. Actually, the futures before it opened were up pretty good. And then it sold off, and then it came back, and then it sold off again right at the end. So Nvidia on deck this week. Nvidia reports on Wednesday, and I suspect that the market will probably tread water between now and then. I think it's after the close on Wednesday, so probably the next 2 days are kind of going to be maybe choppy sideways movement, not much happening. We'll see. And then after the report, we're going to look at the Magnificent Seven today, including Nvidia. But after the report on Wednesday, after the close, Thursday likely will be an interesting and maybe volatile day. And then we have PCE coming up on Friday. So end of the week should be really interesting. But Nvidia is the key for this week. That's what everyone is waiting for. So as always, I am not a financial planner. I'm still not a financial planner. And anything I say is for educational purposes only. I am not making recommendations to buy or sell anything. Nobody knows what the market is going to do, including me. So make sure you understand that. Let's take a look at what happened today. And as you'll see with the market bias, we had another leg down today. So now we are below the support line right over here. So below that today. And that could continue because I noticed that some of the charts were getting close to giving bear signals also. And you'll notice the lights up here now has a red light. So Friday it had an orange light, caution. Today it is clearly a red light. So definitely need to be cautious right now in the market. Make sure your stops are in. Take profits if you have them, because who knows what's going to happen the rest of the week. And we're in the weakest part of the quarter from now until the end of March is the weakest part. The strongest part is the first 6 weeks of Q1, and the weakest part is the last 6 weeks. So we just started that. So let's take a look at the individual indexes and see what they did. The S&P today, as I said, try to make a comeback in the beginning, but ended at the low today. And it actually was, that came down right at probably the last 30 minutes, hit that. Look at the squeeze that we've got going down here. And the momentum is about ready to cross over the zero line. That could happen tomorrow, actually. But that squeeze implies that this is going sideways. Look at how tight that Bollinger Band is. That's the blue area right through here. I did a session on Bollinger Bands and Keltner channels, which is what this is, back a few Tuesdays ago. So you could check that out if you want to. It's on the site. But right now we're broke through the bottom of the Bollinger Band. We likely will be heading down to the bottom of this Keltner. That may be 5850, which is the key level. If we break below that, then we're heading quite lower. But right now, all the momentum right now is to the downside. So let's take a look at the NASDAQ 100, see what it did. NASDAQ 100 is the same, looks the same. So almost to the bottom of its bands as well, closed at the low today, just like it did on Friday. I said on Friday that Max Payne will probably continue into Monday. At first today, it looked like that was not going to happen. It looked like I might have been mistaken, but actually it pulled through and did just what I thought it would do. So another day down. Usually it's the first day after options expiration that continues. It may continue into Tuesday. However, as I said, I think the market is treading water waiting for Nvidia. So the next 2 days, I would not be surprised to see this just move sideways, kind of down here near the bottom of the channel. And then waiting for Nvidia, see what that happens, and then whatever they come out with could send it higher. We'll talk about that in a minute. So that's NASDAQ 100. Let's look at the 10-year Treasury. The 10-year went down today as well. There's the 10-year sitting right down here on support. I had mentioned a while ago that there's a potential head and shoulders. There's a left shoulder, there's a head, there's a right shoulder. And it's right at the neckline right now. So if it breaks through that, it's likely going down here to 4.25. So ended today at just under 4.4%. And if it breaks below that tomorrow, then probably 4.25 is where the 10-year is headed. It's also in a squeeze down here, and momentum is now below the zero line. So it's confirming a downtrend. So you would think that's good news, but sometimes it's counterintuitive, because if the economy is strong, then you can have a higher 10-year. This, rather than this signaling something with inflation, I think this is signaling something with the economy instead, and maybe potentially heading into a recession. Now, I've talked about that in the past. I talked about it all the way through the end of last year, that the indicators for recession, which are actually right on my website on the charts page, there's a whole section for right here, the recession watch. 2 of these 3 have now triggered. And usually when they trigger, it's about 6 months until a recession. So that would put it somewhere around April timeframe. The third one has not triggered, which is the unemployment rate. And we're going to get that a week from Friday. So if that goes above 4.5%, then that will be 3 out of 3 that have triggered. But that's the only one that has not yet triggered. So the yield curve, when it uninverts, so yield curve uninverted back in August, then a recession is on the horizon. The 2-year minus the 3-month, by the way, is still inverted. So the shorter term one is still inverted, even though the one that most people watch is the 10-year minus the 2-year. The other one is the Fed rates and recessions. Usually when the Fed starts cutting, we get a recession about 6 months later. So right there, the only time it didn't happen was back here in the 90s, which was also a secular bull market. So it may not happen this time either, because we are in a secular bull market. So those are the only other 2 times that it did not happen. But every other time after the Fed has started cutting, about 6 months or so later, a recession starts. It even happened for COVID, which really came out of nowhere. So those are the 2 that have triggered. And the one that has not is the unemployment rate. Right here, that whenever that starts to spike higher, then we have a recession, which kind of makes sense, because if we start getting higher unemployment, that usually leads to a recession. But that hasn't really, even though it is high, it's been slowly creeping up. But the last few months, it's not only flat, but actually went down a little bit. I think we need to see that around 4.5 for this one to trigger. That's about where these were before. So we'll watch that a week from Friday and see what happens. All right. Let's take a look at the dashboard first. And the dashboard, here's the Dow. Dow was up very, very slightly. It was up a lot more than that, even about 30 minutes before the close, by the way. So you can see it right here, how it just dropped from 2 o'clock on. Just dropped all the way down and almost ended flat for the day. The S&P, same thing, but it actually went negative. The NASDAQ went negative. NASDAQ 100 down here definitely went negative. It really never even made it back up to flat, the level. So, an indication that we may still be going into more selling as we head into the Nvidia report. 20-year bonds actually were up slightly today. There's the 10-year down, like I pointed out before. Commodities, gold had a pretty good day. Gold was up. Again, maybe telling us that there's a recession coming. We'll see. Oil was up a little bit today as well. Natural gas dropped off a cliff today. Natural gas had been doing pretty well up until Friday, and then just dropped off a cliff today. And then on crypto, I'll look at Bitcoin over here on the Bitcoin chart on the homepage right here. And Bitcoin also went down today, sitting right here at the bottom of this channel. So, and also closed at the low. It has a huge squeeze down here too. So again, It's building up energy. It's like a coil spring. You can see the Bollinger Band, the blue one, is really just getting pinched right there and right inside of the Keltner channel. So Bitcoin is getting ready. I mean, it could keep going sideways for a while, but sitting right at the bottom, and I think it's getting ready to make a move, and it looks to me like the move is to the downside. I showed before previously how Bitcoin now is very correlated to the NASDAQ 100, and that's moving down. So Bitcoin is as well. So if the NASDAQ breaks and really heads lower, then Bitcoin likely will do the same because it has become very correlated with the NASDAQ 100. So keep an eye on that. See what happens. Back on the, let's see, back on the dashboard, we'll look at the, I'm going to look at the sectors here in a minute in a different way. And the industry groups here, nothing of note. Footwear, insurance, there were some financials in here, industrials, distillers and vintners. I guess people are drinking more. Aluminum, nothing really interesting to look at on that one. Over on my top 10 list, here's Fubo, but even the ones in the top 10 really didn't move much today. You know, Brinker was down a lot, so it came up slightly. HIMS was down quite a bit. It didn't really make too much of a move today. It didn't repair the chart, I should say. RELY actually gave a short squeeze today, but it's got a long way to go to really confirm that. If we go to the end of the list, we see some of the quantum computing stocks. Quantum Serve Robotics is there. iRobot is back there. Gorilla Technology heading down. ACMR is a chip stock. Semiconductors. Palantir is on the bottom of the list. Palantir has really been getting hit hard. That's on our Magnificent Seven list, so we'll look at that in a minute as well. We'll go back one more. SoundHound, another AI stock, got hit. SMCI, which had been doing really well, is now pulling back quite a bit. So it came back at about 8% today. So that's what that looks like. Just out of curiosity. One more back, nothing of CLS. That's one that was a high flyer for a while. Another AI type of stock, pulling back quite a bit today as well. All right, so let's take a look now at the sectors. So this is another way of looking at the sectors. I have them in what's called a chart list. So I put all of the 11 S&P sectors as well as the S&P, NASDAQ 100, and the Russell 2000. All of them together in what's called a chart list in stock charts. So I can now massage these and look at them in different ways. And what I'm going to do, first of all, you can see that I've ranked them as of today by their percentage gain. And the S&P is the one to key off of. So it's down here. Everything above that has outperformed the S&P. And the ones that are outperforming, other than communication services, which is aggressive, are all defensive sectors. You get staples, real estate, healthcare up there, materials. Discretionary is an aggressive sector also. At the bottom, we have utilities, but also technology right at the very bottom, and NASDAQ 100 down there too. So another way I can do this is that's a summary view. I can also do this in what's called a candle glance view, and that puts them all side by side. I can have different time frames. So I can look at 1 year, or I'm going to look at 2 months. I can add in an indicator, in this case, the relative strength indicator, and I put them in descending order. So what that means is it will put all of those into the order. The ones in the upper left is the one that has the strongest relative strength. And you can see the one that's strongest is staples. So that's a defensive sector. Healthcare is next, utilities, real estate, communication services is hanging in there. Then we've got energy, financials, materials. And then in the bottom, NASDAQ 100, technology, S&P, industrials, Russell 2000, and discretionary. So you can clearly see the rotation. And the other thing that it stands out really clearly, I think, is where they are versus their 50-day moving average. So the NASDAQ 100 just closed below it today. So did technology. So did the S&P, industrials. Russell 2000 had already been below the 200. 200 is this red line right here, and discretionary as well. And at the top, you can see staples, healthcare, utilities, all above the 50-day moving average. So communication, energy, etc. So that's another way to look at it. Also, something that folks seem to like is the relative rotation. I can do that right from here as well. So here's the relative rotation graph, looking at all of those same sectors. And again, this is looking at a 1-year view. I can go to a 10-day view and a daily, update that. So that gives us something that's a little closer in. And basically you can see down here, the ones that are in the upper right quadrant, the green quadrant, staples, technology is still up there, utilities, real estate. So it's a mixture right now, but the rotation looks like a lot of these are rotating down into the lagging quadrant. That's really the key here, is to see which direction they're starting to move. And a lot of these are now moving into the lagging quadrant. So just again, just confirming that we need to be careful and watch what's going on out there. All right, I am going to look at a couple of stocks real quick that folks asked me about. Let's see, how do I want to do this? Let me do it from here, and I'll take a look at this chart. And we'll look at first from last week, LW, Lamb Weston Holdings Food Products. You can see on the right is the daily chart. Looks awful. Today was a terrible day. Continue to go down. It's had earnings back here. Probably earnings are coming up. Might be, it's not even on the chart, but on the weekly chart, it also looks terrible. So I definitely, hopefully the person asking about this is not in it, but if they are, it may be hitting support right down here on the weekly. There's no guarantee of that, but most likely that's where it might bounce and start heading a little bit higher. But it really doesn't look good right now. Let me go back over here and look at that in a different way. So there's my default view. You can see it went below the zero line up here, so that's confirming the downtrend. So this would have been the point to actually this drop right here would have been the point to get out, but it's continuing lower from there. Earnings are coming up in April, so still got another month left to go. Right here, the red line crossed the green, just about the same place. So this would have been the time to get out right here, or when it bounced back a little bit. So now it's coming up and it's hitting moving average lines and getting rejected, heading lower, and it looks like it might actually continue to head lower. So this is a wider view. Again, doesn't look good on that. All right, the only other one before we take a look at Nvidia and Magnificent Seven is CCL. This is Carnival. Carnival had been doing fantastic. So all the way back here was a low of 14, went all the way up to 28. So it's a double from August until January. Nice double through that whole period. Now it rolled over. If we look at this on the default view, went below zero here. So there's a warning sign. The 5 went below the 21 right there. So there's one warning sign. There's 2. And then it recovered, came back up, came back above zero up here. But then it started doing the same thing. So right here, went below it again, went below zero line. Now it's getting a medium-term down signal with the blue, the 21-day moving below the 50-day. We look at it on a Keltner chart. You can see it is right now, it is down in the 3x Keltner. This is the area where it typically will bounce. So if you're waiting for it to come back up, this might be the opportunity. Yeah, usually it will come back up to the 21-day, which is reversion to the mean. Doesn't mean it will do that, but usually when it gets down here into the 3x area, it at least comes back up to this and many times blows through it. So we'll see if that happens again. The ADX line is still definitely negative. The red's above the green and it's above 25. So that's not a good sign. Now, one thing on this particular one that the person said is that they are doing a wheel strategy. A wheel strategy using options, basically just a high level view, and you can Google this. Anybody can Google it and see what it's really all about. But essentially, you buy the stock. let's say we bought it. We were watching the moving average lines and watching technicals, as I always preach. And right in here, it went above the 21, so right about here. So you buy the stock right there, and you sell a covered call. So you would have bought the stock right there. The high was 26, so let's call it 26. Buy the stock right there, and you sell a covered call, let's say at about 28. All right, so you keep the premium for the covered call, just like being an insurance company. As a seller of an option, you keep the premium, and if it goes up above 28, then it will automatically sell at 28, and you keep the premium that you made down here, just like an insurance company does. If you don't use any insurance, they just keep your premium each year. And then you're out. So it gets called away. You no longer have the stock. It sells at 28, but you bought it down here at 26. So you made $2 plus you made the premium. All right. So the next thing you do then is you sell a put. You sell a cash covered put. And what that means, and in this case, you would probably sell the put for down here at around 25 or 26. Now, I don't know what the numbers for this person were, but you probably would sell the put around here at 26, which means if it stays above 26, then you keep the premium. If it goes below 26, then you buy the stock. You are forced to buy the stock. So now you buy the stock at 26, you still keep the premium. So your actual basis might be, let's say the premium was $1. Your actual basis now will be 25, be down here. And the hope then is that it does the same thing it did back here and goes up again. So when it does go below this, you buy it. You're forced to buy it at 26 or 25. Then it goes back up again and you sell a covered call up here again. You make the premium, it sells out, you make the profit and the premium, and you do that over and over again. The only downside to that, there's no downside to the covered call. It's a very safe options strategy because if you get called away, then you're making the premium and you're making more money from where you bought it at. So that's a very positive strategy. However, on the naked put, not naked, but cash covered put, because you have the cash to cover it, so it's not exactly naked. You don't own the stock, so that's what makes it naked. But you sell the put down here, you keep the premium, which you don't want to happen. So you sell it at you sell the put when you're up here, sell it at 26, it goes to 25. So you are forced to take it because you've got $1 premium. Your basis is 25, but now you own the stock. And your hope is now, because you own the stock, to sell another covered call. But suppose it drops like this, drops all the way down to 23. Well, now you have a stock that you purchased at 25, and now you have a loss down here at 23. So that's where it can get you sometimes if you are not clear on the direction. In this particular case with Carnival, you can see it's been chopping back and forth. It's gone sideways through this whole period right here. So this is one that it might not be a good idea. You want something that is definitely heading higher. So doing that through this whole period would have been a really good strategy. You could have made the premium and made the profit on the stock all the way up. It's only when it starts to roll over, when it gets to the top, and that whole picture that I showed before about what a pattern for the market looks like. I'll show you that again, but you want to look for that same pattern with stocks, not just with the overall market. Because when that pattern appears, like this right here, when stock starts to go sideways like this right here, then that usually means it's getting ready to roll over. So it doesn't mean stocks don't go up all the time. At some point, they will correct and start to move back down. And you need to watch for that, especially if you're playing that wheel strategy. And when it does move sideways, like it has been through this whole period right here, then you have to expect or at least be aware that it could very well drop below and give you sell signals and continue to go down and give back all of this gains that it made all the way back through here. So the wheel strategy, in conclusion, is a really interesting, good strategy if you play it well. I stress that it's best for an uptrend. I do not think we are in an uptrend right now. I don't think we have been in one for a while. I think we have been going sideways since December. So we are in a sideways distribution pattern that usually happens just before a markdown pattern. The markup pattern where the wheel strategy would have worked really nicely is all through this period right here. Anyway, that's my opinion on Carnival. Might not like it, but that's my opinion. All right. Let's now take a look at the Magnificent Seven. And to do this, I am going to look at them. First, I'll look at them right here. So these are the Magnificent Seven. This is on my trend model. I put this on here to show you exactly when it gets a short-term, medium-term, and long-term signal. And it shows you what the short-term and medium terms mean. And you can see there are quite a few reds. There's a lot of reds now in the medium term. And a lot of these actually happened today and the late last week. So the warning is that these may be starting to head lower. If we go back to the sector chart back here, and I'll go back to summary. And in this case, I'm going to bring up the Magnificent Seven right here. And we'll look at those same ones in this way. So this is intraday. So for today, there's only two of them were positive for the day, Apple and Costco. The one at the bottom is Palantir, lost almost 11% just today. So you can see what's going on. Nvidia lost 3% today. So that's what they look like on a performance basis just for today. I can also look at them on a candle glance basis using the RSI again, which brings the strongest one to the upper left. And you can see now in this case, and again, take a look at where the 50-day is, the red line. So Apple is the strongest and Costco is second. Netflix is third and starting to come down. And then we have Nvidia. Nvidia is the fourth strongest of all of them, but it today now is below its 50-day moving average. And then Palantir is still the fifth strongest, but you can just look at the charts and see what they look like. Microsoft, Broadcom, the worst one actually is Amazon, way down here. Arista Networks, Tesla, down here, Google. So now it gives you a view of the strength of each of these in the Magnificent Seven and which ones are the strongest. Nvidia is still hanging in there, but pulled back quite a bit today. We can also look at this with the relative rotation graph. So you can see what the rotation looks like. Let me do this on a daily right there. So there's Palantir. Palantir is making a big, huge move from leading to weakening. And the rest of them are all over here on the left-hand side. Tesla is all the way to the left in the lagging quadrant. Nvidia is up here, made it into the leading quadrant, but now starting to decline. So we'll keep an eye on that, see what happens. There's lots of different ways you can look at them in this view. The chart book allows you to use your standard default and look at each one individually. So there's Google. I'm going to step through each of these, and you can just get a sense for what the chart looks like. The one at the bottom shows how it's doing versus its peer group. So that's important, especially going into earnings. You want something that is outperforming its peer group. This one here is a force generator, just basically how it, from a technical perspective, whether it's trending up or down. The red line is the advanced decline. the accumulation distribution line, whether it's being accumulated. And interestingly, Google, even though it's pulling back, the advanced decline line still is okay. But this is also important. The MACD appears below 0. So those are the things to look at, as well as the moving average lines and the cloud. So if it's below the cloud, it is confirming a downtrend. Below 0 up here, confirming a downtrend. So let's take a look at all of them. There's Google. There's Amazon. Remember, this was the worst looking one. Underperforming its peer group. It's below 0. And it's been underperforming here, even its own moving average line. And it just got a short, medium-term down signal. So Amazon's not looking great. Apple was the best looking one. So all of its indicators look pretty good for Apple. There's Meta, not looking good. It's actually going to give a short-term down signal tomorrow. Doesn't quite have it yet today, but it will have one for sure. No matter what it does, it will have one tomorrow. Momentum will just pull it down. It's still outperforming its peers, though. Here's Microsoft, really terrible looking chart for Microsoft. Continues to head lower. And here's Nvidia. I'm going to come back to that. Let's look at the rest. There's Tesla, not looking good. Still outperforming its peers, though. Netflix had been doing great. It's rolling over a little, but the chart's not broken. So Netflix still looks pretty good. Costco it was the second best one. Costco looks great. There's Palantir. Palantir is definitely rolling over and heading lower. Still outperforming its peers, though. But the momentum is decidedly to the downside. So it's going to be sitting right on its 50-day moving average probably tomorrow. So have to be careful on that. There's Arista Networks, looks bad. It's below all of its indicators. Broadcom, now below the 50 as well. So it's starting to look pretty bad too. So let's go back to Nvidia and look at it a couple of different ways. One way we can look at this is we'll look at it using the default right here. And you can see how it's just moved sideways. So waiting for earnings. Earnings is on Wednesday. Should be after the close, right above the 200-day. So it may just come down and sit right here on the 200-day in the next 2 days, waiting for earnings. And then it's going to wait to see what happens. Now for Nvidia, I think, this is my personal opinion, because there are so many people in Nvidia, I think their earnings have to be perfect. I think they have to beat earnings handily. They have to beat revenues handily. And they certainly have the ability to do that. So I'm sure that they're going to beat those two. But then the guidance also has to be better than expected. If guidance comes in just as expected, even though everything else looks great, I think Nvidia may just sell off. I think everything in that earnings report is going to need to be perfect in this current environment right now. So the market is just looking for an excuse to go lower. And Nvidia could very well be that excuse. So we'll find out on Wednesday. Look at it a couple of different ways. So if you can see with the Keltners, it's sitting right in the middle. So that's reversion to the mean. It's sitting right at the mean right now. The ADX line, the red is about to cross the green above 25. So that's bearish if that happens. This is the John Carter squeeze. It is not quite in a squeeze just yet, but may get there soon. And let's look at it on a long-term basis. So this is a 3-year chart, 2-year chart. So right now it's still okay on the long term. So those that are holding this for the long term, there's really no reason yet other than the momentum is decidedly coming down, even though the stock has kind of gone sideways, made a new high here, but momentum continued to go lower. But it's still sitting right here. If I was using this on the market timing strategy, it would probably get a sell signal today. But this is a weekly chart, so it doesn't complete until the end of the week. So really, depending on what Nvidia does with earnings is going to determine what this looks like. So it may come down just like it did right here. If it goes below that, it'd be sitting right above its cloud on a weekly basis. It's not going to take much to push this over the edge. So like I said, its earnings need to be nearly perfect on Wednesday. So we shall see what happens. All right. So be careful. There's Nvidia today, 2 days in a row, just kind of following the rest of the market. I think the market's going to tread water for the next couple of days, and then we'll see with Nvidia's earnings what happens after that. All right, that's it for today. Thanks for watching. Please like and subscribe if you want me to continue doing this. Tomorrow is Technical Tuesday, and I think what I'm going to do, there was a recommendation when I did the YouTube with Mike Zuber yesterday. He said I should do something on inverse ETFs, but then I went back and looked at Technical Tuesdays, and I've already done that. So if you're interested in learning more about inverse and leveraged ETFs, then go back and watch that video that's in the playlist for Technical Tuesdays. So what I'm going to do instead for Technical Tuesdays is I'm going to spend some time tomorrow understanding moving averages and why I use the ones that I do, how they're put together. And I'll actually show you some different examples of different ways to use moving averages and the reasons that I use the ones that I do. So that will stay tuned for that tomorrow. That's tomorrow's Technical Tuesday. All right. Thanks, everyone. Have a great night, and I will talk to you soon. Take care.